Welcome to this explainer, where we're going to unpack the driving forces behind Riot Platforms' massive stock surge in early 2026. If you've been watching the markets lately, you know that the intersection of cryptocurrency, artificial intelligence, and energy infrastructure is exactly where some of the most explosive moves are happening right now. And Riot Platforms has basically planted itself right at the center of all three. So today we're going to dig into the data, the earnings reports, and the analyst notes to figure out exactly what's going on behind the scenes of this crazy rally.
Okay, here's our roadmap for today. We're going to hit the 2026 stock surge, look at their Q1 fundamentals in mining, explore their AI data center pivot, check out this wild nuclear energy bet, and finally, wrap up with analyst targets and valuation. Let's get right into it.
Section 1. The 2026 stock surge, a true market phenomenon. You really can't talk about Riot in 2026 without bringing up the sheer momentum it's had on the charts. Check out the sheer scale of this move. We're talking a massive 114% year-to-date gain as of early June. And get this, according to data from S&P Global Market Intelligence, a staggering 57% of that jump happened in May alone. I mean, for a multi-billion-dollar company to see its market cap literally more than double in a matter of months, that is a massive market phenomenon. So what's actually driving this rally? Is it just the rising tide of Bitcoin lifting all boats? Is it the broader AI market boom pushing everything tech-related higher? Or, actually, is there something fundamentally changing inside Riot's own business model? Well, to answer that, we've got to look at the numbers. Moving on to Section 2, Q1 Fundamentals and Mining. Before we get swept up in the AI and nuclear headlines, we need to understand the financial engine that's currently paying the bills. So, looking at their Q1 stats, they're honestly pretty robust. They cranked out over 1,400 Bitcoin in just the first quarter. But here's the real kicker. They actually dropped their direct cost to mine by 26%, bringing it down to about $44,600 per Bitcoin. Plus, they scooped up $21 million simply by curtailing power. Basically, they sold energy back to the grid when prices spiked, which essentially knocked their net power costs down to a crazy low 3 cents per kilowatt hour. And sitting right there on their balance sheet is a massive $1.1 billion reserve of Bitcoin. That is a serious war chest, guys. It means they can fund huge future expansions without having to instantly dilute shareholders by issuing a ton of new stock.
Now, this brings us to a really important point about their financials, which, let's be honest, might look a little terrifying at first glance. If you just read the headlines, you'd see Riot reported a $311 million EBITDA loss. Yikes, right? But hold on. Because of mark-to-market accounting, which basically forces them to record the current, super volatile market value of their Bitcoin holdings, $326 million of that was just a non-cash adjustment. So the big takeaway here is that this massive reported loss absolutely is not an operational failure. It's literally just a paper loss tied to crypto volatility. Under the hood, their core mining business is actually highly efficient.
All right, Section 3, the AI data center pivot. This is where they're diversifying revenue and where the story shifts from just a standard crypto narrative into something way bigger. In Q1, Riot posted a brand new revenue stream of about $33.2 million from data centers. But we gotta break those numbers down, because there's a completely critical difference here. About $32.2 million came from tenant fit-outs, which is basically procuring and setting up gear for clients. It brings in big top-line revenue, sure, but it only has a tiny 5% margin. It's just pass-through costs. But then, look at the other bucket, $900,000 from actual operating leases. Now, I know $900K sounds like small potatoes compared to $32 million, but it boasts a massive 91% margin. That is highly predictable, recurring cash flow. And as Riot finishes building out these sites and shifts clients over to long-term leases, that ultra-high margin revenue is expected to absolutely skyrocket. And the scale of what they're trying to build is just staggering. Riot CEO Jason Les highlighted their massive Corsicana site down in Texas, which has a full gigawatt of approved power. To give you some perspective on how huge that is, they've already inked a lease with tech giant AMD for 50 megawatts. Snagging an investment-grade tenant like AMD proves Riot can totally play in the hyperscaler big leagues. But here's the wild part. That 50 megawatts is just a drop in the bucket compared to the 756 megawatts of total leasable capacity they have at Corsicana alone. They're actively out there talking to hyperscalers to lease the rest of it out. The growth runway here is just massive. Okay, let's jump into Section 4, the nuclear energy bet, or how they're powering the future. This is the specific catalyst that sparked that massive 27% stock surge over just 2 days in May. Basically, Riot partnered with a company called Terrestrial Energy to co-locate advanced molten salt nuclear reactors right next to their data centers. In plain English, Riot gets a dedicated, squeaky clean nuclear power plant as a neighbor to feed its incredibly energy-hungry AI data centers. Terrestrial gets a guaranteed customer who will happily buy up every single electron they make, and Riot gets to brag that its AI centers run on 100% clean, reliable nuclear energy. It's literally a match made in infrastructure heaven.
But, and this is a big but, we really have to look at the timelines here. The stock went completely nuts in May 2026, right? But the reality of actual functioning molten salt reactors is very much an early 2030s vision. Right now, there are no binding contracts. It's just an agreement to, explore opportunities together. Terrestrial Energy still has to secure funding and jump through a massive mountain of regulatory hoops before they even break ground. So what the market is getting super hyped about today is a vision that honestly won't generate a single watt of power for another 5 to 7 years at best.
Which brings us nicely to our final part, Section 5, Analyst Targets and Valuation. Let's weigh the risks and see how Wall Street is looking at this.
So how is Wall Street actually valuing this crazy mix of crypto, AI, and nuclear infrastructure? Well, institutional sentiment is definitely leaning heavily bullish right now. Looking at data compiled from 22 Wall Street analysts over the last year, a massive 19 of them have issued a buy rating for the stock, only 2 holds and just 1 sell. Heavy hitters like JP Morgan and Citigroup are keeping an overweight or strong buy consensus. Wall Street clearly loves this pivot. They love that Riot is evolving from just a Bitcoin miner, totally at the mercy of crypto prices, into a serious infrastructure provider locking in long-term AI data center leases.
However, if we take a step back and look impartially at the underlying valuation metrics, it tells a slightly different story. The average price target sits around $24.70, and sure, high estimates reach $30, but Riot is trading at a pretty frothy 15.8 times trailing sales. To put that into perspective, the US software industry average is just 3.9 times sales. That is a massive gap, and it points to some very real valuation risk. The market isn't pricing Riot for what it's doing today. They're pricing in a completely perfect execution of its AI leasing and nuclear strategy years down the road. If the demand for AI compute cools off even a little, or if that data center capacity sits empty, that 15.8 multiple is going to compress very, very quickly. So, as we wrap up this explainer, the ultimate question really comes down to this. Are investors smartly getting in early on an AI and energy powerhouse that's perfectly positioned to capitalize on this massive compute shortage? Or are they dangerously betting on a 2030s nuclear dream that's already been bolted onto a 2026 stock price? One thing's for sure, Riot Platforms absolutely has the cash, the Bitcoin reserves, the power access, and the validation from giants like AMD to make a serious run at this transition. Thanks so much for joining me today to unpack this fascinating company. Keep a close eye on their upcoming lease announcements, because that's going to be the true test of whether this massive rally is actually justified. So what do you think? Is this the infrastructure of tomorrow or just a market getting ahead of itself? Catch you next time.